Hey, this is Bitcoin Asset Research with Allard. Today I want to talk about MicroStrategy, MSTR. This is definitely a company that is very near and dear to my heart. It's definitely the biggest equity position I have right now. It's also my second biggest investment, number one being, of course, Bitcoin itself. And over the last few months, I've written a lot of bullish articles about it on Seeking Alpha. I started writing here back in March, and every single recommendation has been a buy recommendation, as you can see here. If anyone had heeded my recommendation, they would be up substantially at any buy point. And funny story, this very first article came out with a ton of backlash. I got a lot of negative comments on this. So it's definitely good to be proven correct. And over the last few months, my thesis has definitely evolved too. Here I started off thinking about it as an S&P 500 index inclusion trade. And then I started thinking about how the stock split presented enormous upside in terms of liquidity dynamics. And then over here, I analyzed the BTC yield earnings call. I believe that was Q2 of this year. And then here I did a basic valuation model based on BTC yield and how that justified the premium to its NAV. This latest article was about how long Bitcoin short MicroStrategy as a pairs trade was kind of a stupid idea. And of course, I was proven correct. Here is the MicroStrategy to Bitcoin ratio. This is how much 100 shares of MicroStrategy was worth in terms of Bitcoin. This number has steadily trended up year to date. And even when you looked at when I first published this article, November 4th, here we have November 4th. Yeah, that's November 4th at 0.33 was the ratio, and it's skyrocketed up now to over 0.35. So clearly, if you had done this long Bitcoin short MSTR, you'd be underwater. Now, this video is only my latest understanding of MicroStrategy. I do think I have reached a point where I believe a lot of my previous understandings were insufficient, and that is why I'm making this video to discuss this latest understanding. So what did I think before? Well, very succinctly, I thought of it as leveraged Bitcoin plus some alpha, and that alpha was the Bitcoin yield, the BTC yield. And I thought of MicroStrategy's premium over its Bitcoin holdings as justified because of its positive Bitcoin yield. And to me, this is a rather obvious conclusion, because if you just plot MicroStrategy's daily return against Bitcoin's daily returns, you get this interesting regression line, y equals 1.1x plus 16 basis points. So really, the way to interpret this is that MicroStrategy's stock has a 1.1 beta against Bitcoin's daily returns, but then it also has a y-intercept, which is an alpha of 16 basis points. So this is a daily 16 basis points, and of course that compounds 252 days per year. Then this has just been the last 4 years of data. Now, I thought that this definitely justified the premium to its NAV, because if Bitcoin per share is able to grow over time, then the equity is definitely worth more than the raw Bitcoin assets. It's definitely worth more than the Bitcoin reserves net asset value, the NAV. So acquiring Bitcoin intelligently by selling volatility, that was what I viewed as the core value proposition of MicroStrategy stock. So I want to say that this is not fully correct. At the very least, it is missing the big picture, but it is much more right than the conventional view. And what exactly is the conventional view? It kind of looks like this. MicroStrategy is overvalued because the Bitcoin holdings is half the market cap. Half is what they used to say, because now it's about 1/3 of the market cap because of how much MSTR has skyrocketed over the last month. And then the conclusion for this would be to do this pairs trade long Bitcoin short MSTR. But of course, when we look over here, we realize how long Bitcoin short MSTR has been doing. This is literally long MSTR short Bitcoin, and the number is going up. And then of course you have people that would say the software business, MicroStrategy software business, is a loser because it loses money. And this isn't even really wrong, but I think it's just missing the point. It's missing the big picture. Then there's this, it's just a leveraged Bitcoin fund, which of course is not true. There's no way to get Bitcoin back by turning in your MicroStrategy shares, and there's no way to create new MicroStrategy shares by turning in Bitcoin. So arguing that it should trade at net asset value doesn't make any sense either. And of course, there's the clown critique, which is that Bitcoin is a Ponzi scheme. These people we don't really have to be concerned with because they won't ever short Bitcoin, it seems, either. My new perspective is that MicroStrategy is Bitcoin's only investment bank. And I actually think the ramifications of this is enormous. It basically means that the premium is a distraction. Like, you don't have to worry about the premium at all. And by the end of this video, you'll see why I say that. So I actually see MicroStrategy as having three business segments: Bitcoin holdings, the software business, and the investment bank. Now you'll realize that the traditional view sees MicroStrategy as two segments, just its Bitcoin holdings and the software business. I have this third segment, the investment bank, and I've also denoted the B in the investment bank with the Bitcoin B, because this is a special investment bank that only services one client, which is Bitcoin itself, and it is Bitcoin's only investment bank. So let's just get into what I mean by that. So first off, what is an investment bank? This is how investment banks work. It sits in the middle of the capital markets, and it links people who desire capital. These are these corporations that are raising money, with people who have capital. These are investors. So the investment bank sits in the middle over here. Capital goes in from the investors to the investment banks, and it goes to the corporations. And in return, the corporations, through the investment banks, give the investors these securities so that the investors can have some kind of stake in the economic production and the economic returns of the corporation. So this is how the normal investment banking business works. The investment bank effectively takes this underwriting fee for processing all of this movement of capital. So MicroStrategy's only client is Bitcoin. So I'm saying that rather than having a corporate client, the Bitcoin network itself serves as MicroStrategy's only client. MicroStrategy underwrites Bitcoin securities because all MicroStrategy securities, all of them, are ultimately backed by the Bitcoin that is held by MicroStrategy. So this is what I am proposing MicroStrategy actually looks like. Remember, this is the same picture that we saw 2 slides ago, right? So this is a slide, and it turned into this. So we've replaced the corporate entity with the Bitcoin network itself. The bonds and shares that came through are now MicroStrategy bonds and shares, which are backed by Bitcoin. And then the capital flow remains the same. Really what's happening is investors are giving capital to MicroStrategy. MicroStrategy passes it off to Bitcoin. And then in return, the investors are getting MicroStrategy securities. And MicroStrategy sits in the center of this thing just like a traditional investment bank does. So here are the other functions of an investment bank. An investment bank markets the client's investment merits. And you can see that because, of course, Michael Saylor has been this guy has spent hundreds of hours on podcasts educating the public about Bitcoin. And you also have investment banks publishing actionable research. And of course, MicroStrategy has done this. They famously open sourced their Bitcoin corporate playbook. Anyone can go on their website and download this and check it out. This is very informative to read through. And these are all just some of the core functions of an investment bank. This is what an investment bank does for its client. And I'm trying to show that this is what MicroStrategy, the investment bank, is constantly doing for its single client, which is Bitcoin. Now here's the core distinction, right? So I'm saying MicroStrategy is an investment bank, and then there are some distinctions between MicroStrategy and like normal investment banks. Normal investment banks, they take fiat, they take dollars as an underwriting fee. Okay, so Goldman Sachs gonna underwrite for Apple, they're gonna take dollars as an underwriting fee for that securities issuance. MicroStrategy's underwriting fee, they take it in Bitcoin, okay? This is just the economic relationship that is going on. The underwriting fee of the MicroStrategy investment bank is accepted in Bitcoin. Now this would be like, to bring it back to the normal investment bank, this would be like Goldman Sachs helping Apple IPO and then taking the entire fee, the entire underwriting fee in Apple stock, right? Like that would be the analogy if we were to bridge it to the normal investment bank, right? So that is the core distinction. While normal investment banks takes the fiat as an underwriting fee, MicroStrategy is actually taking a stake in its client as the underwriting fee. It doesn't take dollars as the underwriting fee. So when a normal investment bank, what it does is it receives fees in dollars and then it gives that as a dividend to the shareholders. This is obviously oversimplifying a lot of things, but this is the normal flow of events. With MicroStrategy, the investment bank, it accepts fees in Bitcoin and then it gives it off to shareholders in the form of a BTC yield. This is just Bitcoin per assumed diluted share is increasing on a period over period basis. Now, if you like this video so far, I just ask you to like it, subscribe to the channel, share it with somebody, or leave some kind of comment. Help me make these videos and my investment thesis better with your feedback. I would really appreciate that. Now, what does this mean for the stock? What does this mean for MicroStrategy? Well, it's an equity stake in the investment banking operation, amongst other things. It's also an equity stake in the other two segments I mentioned, Bitcoin holdings and the software business. But it's definitely an equity stake in this investment banking operation. So banks is a business about spreads, okay? So banks earn the spread between the interest rate on loans and the interest rate paid to depositors. So you deposit money with the bank pays you an interest rate, and then and someone else tries to take out a mortgage and then pays an interest rate to the bank. That's the loan. So the spread between the interest rate on the loan and the interest rate paid to depositors, that's the profit to the bank. Investment banks do something very similar. They earn the spread between the securities bought from the client and the securities sold to the market. This isn't an exact way of what's happening, but it's economically true. So this is why I'm putting it in these quotation marks. See, if we just go back to this diagram, right, you could think about it as the investment bank standing in the middle taking an underwriting fee for this process. Or you could just think about it as the corporation sells securities to an investment bank, and then the investment bank sells the securities to the investors for a higher price. So the difference between the security sale price is just the underwriting fee for the investment banks. It is basically economically identical to think about it that way. Now, banking is a spreads business, right? So bigger spread means bigger money. MicroStrategy spread is big. It's actually huge, right? So you have what's coming in is an over 50% CAGR of Bitcoin. So Bitcoin's CAGR is generally over 50%. And then on the outgoing, you have a less than 1% interest rate on the convertible debt. Now, of course, this is subject to some level of dilution, but generally this is a very low cost of capital. You're paying less than 1% interest rates. This is easily the biggest conceivable spread in all of finance, right? So you're getting over 50% CAGR and you're paying less than 1%. So MicroStrategy can issue more securities too. It's not just convertible debt and its own equities. They can do warrants, they can do preferred stock, convertibles on that preferred stock. I think this would be something that's interesting. They can do mezz debt, structured products for folks with ISDAs. All of these things can be tailored via different covenant structures to create an exact risk return profile that fits a certain type of investor. So that's what's especially useful about this. MicroStrategy, the investment bank, basically chops up the volatility and return of Bitcoin and distributes it to all kinds of investors in the form of MicroStrategy securities. Now, everything the market does not want is absorbed by MSTR common stock. We can think about this in terms of the law of conservation of energy, right? Energy cannot be created or destroyed, but it does change forms. It does move from one conduit to another. So MSTR is like this dampener or absorber for all the other MicroStrategy securities that are being issued. So what does this mean? Like MicroStrategy debt isn't so volatile because MicroStrategy stock is extremely volatile. You could think about this as like this conservation of volatility, right? Like MicroStrategy stock is so volatile, and that kind of absorbs the volatility out of the debt because the debt investors don't want something that volatile. So this is generally the idea. It's to make everyone happy, and this is the job of an investment bank. It's to link people across the capital markets, borrowers and savers. This is the role of the entire financial system. It's to make everyone happy. The guy who wants capital, he's willing to pay a cost of capital in order to access that capital. And then the guy who has capital and doesn't need to use it right now, he wants to earn some kind of return on capital. So the investment bank sits at the middle. They link the two together and they underwrite this deal and they make everyone happy. That is what MicroStrategy is doing. It makes all of these market participants happy, and as a return, the MSTR stock receives everything else that the market does not want. So all of that money that MSTR raises, it is actually revenue. This would be the crux of my argument here, that all of the money that MSTR is raising, they have projected $42 billion over the next 3 years. That is all, like, I would call that revenue. And all of the money they have raised, like it was about $5 billion this year, have been raised via convertibles and at-the-money offerings. I would also consider that revenue. And I would consider it revenue the same way a bank's interest on loans is revenue to the bank. Now, you might think I played a trick on you, right? Like, it seems kind of weird. You might be saying, wait a second, Allard. If Bitcoin is the client, then MicroStrategy has to give Bitcoin the money. right? It can't just keep the money for itself. How can you say that it is revenue? Like, the bank is supposed to give its client the money, so why would you say that this money is actually the bank's revenue? So I actually think that both things can be true at the same time. Bitcoin does receive the money the moment MicroStrategy uses the money to buy BTC. That's when Bitcoin, the client, receives the money. And then in that moment, Bitcoin immediately pays MicroStrategy the underwriting fee. Remember that the underwriting fee is in Bitcoin, it's not in dollars. And this Bitcoin is, of course, worth exactly the amount of the money that was just raised by MicroStrategy. So both things have happened at the same time, right? Like, Bitcoin was given the money, and the MicroStrategy did receive an underwriting fee. So that money does count twice, because there was this exchange that happened simultaneously. And when Bitcoin receives the money, it immediately uses the money to create value, because the injection of capital into this absolutely scarce asset, it pushes the market cap higher, assuming everything else is equal, right? So this is really what's happening. All three things occur at exactly the same time. But it's kind of hard to see this because, first off, one, no one has seen an investment bank accept Bitcoin. So this is like, you wouldn't look for this kind of thing. No one has seen something that can take money and immediately create value. So I just said that when you give money to the Bitcoin network, it immediately creates value because the market cap goes a little bit higher. And this normally doesn't happen, because if I gave you some money, it would normally take you some time to deploy that capital and create value out of it. Right? You would have to take that money, maybe start a team, build some kind of product, and then you would generate cash flows maybe a year later. That takes you time. Maybe you buy a house and it takes like 2 months to buy this house and then start earning rent. So it takes time to create value, and there's not really something that immediately creates value. But Bitcoin in this scenario can accurately be thought of as a thing that can immediately create value as soon as you give it money. And then the third thing here is, no one really expected a blockchain to have an investment bank. This is just kind of a weird idea all around. But once you see all of this, you can't really unsee it. Every dollar MSTR raises, it has been the investment banking segment's revenue. The same way that a bank's revenue is the interest that it earns on the loans. Now, this is of course mind-blowing, because that is an absolutely massive amount of revenue. Again, MicroStrategy raised like $5 billion this year alone that was used to buy Bitcoin. And it changes everything. It changes so much about the valuation of the stock. So MicroStrategy is not just a mediocre software business with a pile of Bitcoin that it bought with leverage. It is Bitcoin's only investment bank, and probably forever the most well-capitalized. And that's because MicroStrategy's ownership of over 1.3% of the supply is probably going to be something that no one else will be able to achieve. Like, at this point, if anyone wanted to purchase 1.3% of the entire supply, they would drive the price up so high that they probably wouldn't be able to get to 1.3% in time, just because of Bitcoin's absolute scarcity. So at this point, this is a pretty permanent moat that MicroStrategy has created for itself, and that's what's so formidable about this business. As I've said, the IB segment generated $5 billion in revenues. There's $5 billion raised to buy Bitcoin this year alone, so that's a huge amount of revenue. And the market cap right now is only $69 billion. So when you put that into perspective, the market cap starts to make a lot of sense. And I just want to say here, MicroStrategy is therefore the first company in history to be misunderstood, because it is straddling two different monetary standards. Fiat accounting forces the treatment of Bitcoin as a balance sheet item, when the economic reality is that Bitcoin that was purchased is actually a revenue to the business. So that's what's so misunderstood about this. I would argue that's part of it, because everyone's focusing on the Bitcoin and they're thinking that, oh, the market cap is way too high for all of the assets on the balance sheet. But in reality, that shouldn't have been seen as a balance sheet function. It's the purchased Bitcoin is a revenue. And this is why the premium doesn't matter at all. So I'm going to cut it off here, guys. And next time I'm going to talk about how I would value this equity. So that concludes the video. Thank you so much for watching. If you liked it, be sure to like and subscribe to the channel. Leave a question or comment in the comment section below, and I'll see you in the next video. Bye.